instead of thinking of, okay, Bitcoin's going to go up and I can offload it for something, you can think of it as this will preserve my purchasing power. This is savings technology. So that's the difference, right? When you put money into your bank account and you get a 1%, 2% yield in a high interest savings account, you are not thinking of that as an investment. You're not speculating thinking, oh, I can put this here and earn this 2% and that's going to be more valuable over time. You know exactly how much it's going to be more valuable by. It's by that 2%. And that nominal bias is actually tricking you because inflation and the debasement of currency is higher than that 2%. So you're not even treading water with a high yield savings account. But what you're looking at in that space is you're not putting your money at risk. You're not investing it into your savings account, or at least you don't think you're putting it at risk. In my opinion, you are putting it at risk. But that's besides the point. When you put your money into Bitcoin, when you trade your fiat dollars that you've worked for and you store it in Bitcoin, if you think of Bitcoin as a savings account, if you just think of it as money, I have traded my time and energy, I've gone to work, and there's this little middleman of acquiring fiat and then swapping that for Bitcoin. But if the fiat didn't exist and you actually got Bitcoin for your time and energy, you wouldn't think of that as an investment. That is a currency, that is money, right? So the switch from fiat to Bitcoin, it's not a speculative purchase of an investment that you think was going to go up in the future and you're going to trade it back down for dollars at a certain point. If you treat it that way, again, you can treat it as an investment, but it's not built like that. It's not built like that. It is built to go up in purchasing power. So right now we value Bitcoin based off of the denominator of US dollars. Now we saw a recent spike in Bitcoin's price because the dollar, the US dollar, weakened. So it hit all-time highs in the US dollar before it hit it in many other currencies, which is atypical because usually the dollar stays relatively strong compared to other currencies. So what I'm getting at there though is that you're always pairing it. You're pairing the value of Bitcoin with something else. You're pairing it with US dollars, Canadian dollars, and really what you should be pairing it to is what you purchase. Is a house getting cheaper in Bitcoin? Is ribeye getting cheaper in Bitcoin? Is a car getting cheaper in Bitcoin? These things that are very valuable that you need as a human in society. And when it does, you recognize that it has worked as a savings vehicle. You're not speculating on Bitcoin having some sort of earnings report, the market perceiving it well. I mean, all of these things happen in the short term, but because Bitcoin fundamentally has the best properties of money, it will become money. There's a quote by the late great Charlie Munger, who actually also quoted that Bitcoin was rat poison squared. He said, "Show me the incentive and I will show you the outcome." The incentives of all the individuals in the world is to preserve their purchasing power, their time and money, their time and energy. They plan and hope to store it into the future so that they can use it when they need it.